Morning, everybody. It's 26th of January. I'm Joe Neighbour from Signal Centre talking ball this morning. Still no Steve. He is back next week, and in the meantime, enjoying some nice time off. So let's get stuck into the latest headlines with regards to the markets. It's a big day today. We've got the Federal Reserve speaking later. But before we get to that, we have obviously got some issues going on in the geopolitical scene between uh, everybody else and Russia, it would seem. President Joe Biden said he would consider personally sanctioning Vladimir Putin if he orders an invasion of Ukraine, escalating the US efforts to deter the Russian leader from war. The US rarely levels sanctions directly against heads of state, but Biden has threatened some more severe economic penalties the US and its allies can muster if Putin orders more than 100,000 troops massed outside the Ukraine border to enter the country. Also, what's going on the political scene in the UK? Boris Johnson supporters say the launch of a police inquiry into alleged breaches of pandemic rules in Downing Street has led prospective Conservative rebels to hold off any bid to oust the Prime Minister for now. London's Metropolitan Police on Tuesday announced the probe into events held in Johnson's office during the pandemic, escalating a crisis that has left him fighting for his political survival. As we've seen, he's slipped out of these situations on a few occasions before, but this one may look as though it's a step too far, but we will see in the coming days, I'm sure. In terms of what's going on, shares rose in late trading, reversing an earlier decline after the software giant gave a forecast that reassured investors the company's Azure cloud computing business still has potential to drive growth. Earlier, Microsoft had reported quarterly sales that topped 50 billion for the first time and profits that exceeded analysts' estimates, fueled by cloud, gaming, and Windows software. In terms of then later on today, the big date or big event in the market, certainly today, is the Federal Reserve, who are obviously looking to try and quell the highest inflation in a generation without stalling labour market gains. So, obviously, a fine balancing act that they need to try and manage. So, in terms of what we're expecting today, we're not expected to see any changes to rates, but we are expected to get more details laid out on tighter policies that are expected later in the year, perhaps as early as March. So that's at 7 p.m. today. So in the meantime, let's get stuck into some charts and have a look at what's moving ahead of the Fed meeting later today. So first up, looking at the dollar index. So that remains within this bullish channel, as you can see. Yesterday, we did see a little bit of a reversal, actually. So we posted gains up as high as around 96.27 before rejecting all of those. Still closing mildly positive on the day, but we are posting higher prices today, up by 0.14% as things stand. And almost on the flip side of that, down by 0.14%, we've got Euro US dollar. So that broke out of this consolidation channel that's been forming for a number of weeks, going back to November. We broke out to the downside on a closing basis below the 113.14 level. In fact, maybe this level is more relevant now, which was around about 113.00, so a nice round number. So we closed above that yesterday, but we're below it today by around about 15 ticks. So for me, it looks like we are going to see a continuation lower in line with the dominant downtrend on Euro US dollar. So no signs of that reversing anytime soon. Still looking for our targets down here at 110.58. That's the measured move of this large head and shoulders top pattern that formed many weeks ago. Moving on now to cable, that's lower this morning, still continuing to struggle following the rejection of this resistance at 137.05, this 50% Fibonacci level. And since then, we've seen continued movement to the downside. We stalled that a little bit yesterday. We didn't make a new low. But we closed roughly where we opened, and we're posting a few losses as things stand at the moment, but quite muted really from cable today, given what's going on in the political situation in the UK, the geopolitical situation obviously with Russia and Ukraine, and also ahead of the Fed meeting later today. Taking a quick look at euro sterling, that rejected gains that we saw in the previous session yesterday, not quite engulfing all of the gains that we posted on the 24th, but most interestingly, I think still below this resistance at 83.80. So overall, still looking for lower prices. As you can see, the trend remains pretty bearish on that one. Still looking for a retest at some point of these lows down here at 82.75. Those were the lows that we posted back in 2019 and in the early part of 2020. So still looking for more pressure on the downside with that one. Looking at Aussie US dollar, we've seen a couple of days of strength posted. I mean, yesterday was really a bit of a doji, I suppose. Didn't really make any ground, but we're posting a few gains this morning by around 10 ticks or so. I think probably going to see a few holding patterns on some of these currency pairs ahead of the Fed meeting later today. So nothing to get overly excited about. Overall, still looking for lower prices following the break of this consolidation channel. That'll do for the currencies then. Let's move on to cryptocurrency. So we've seen this 50% fib level on Bitcoin do a reasonable job. Yes, we overshot it on the dailies, and we saw this massive reversal candle on the 24th. It was interesting yesterday when we saw the recovery take shape in equities. It was actually Bitcoin that was leading the markets, well, not leading the markets high, but it was outperforming the equity indices yesterday, which was quite an interesting sign. So we posted higher prices yesterday. We're on the front foot again today, up by around about 650 ticks. I think this is the key level that we need to be focused on today on the upside, which is 39,600. We've obviously broken below this support here, which worked on two occasions, so in January and also last year in September. A retest of the underside, that will be quite interesting to see whether or not there is likely to be more selling pressure. Clearly the trend is lower at the moment, so I wouldn't be looking to back against that. And from a preference point of view, I'd like to see more of a kind of bottom take shape before we were looking to back any sort of real sustained recovery in Bitcoin. So for now, looks as though it's on the front foot, but fast approaching 39,600, the underside of the previous support, which should now be resistance, and it'll be an interesting test to see what happens. Ultimately, if it fails into that zone and this trend line continues to cap the upside, then I still think this is very much in view, this kind of 30,000 level that we saw on a couple of occasions during 2021. Having a quick look at Ethereum then. So we saw this obviously massive reversal here that was posted again on the 24th. Yesterday, a little bit of indecision, didn't really make any ground either way. We are on the front foot again today. The corresponding level that I've just mentioned on Bitcoin on the upside that we were looking at, for Ethereum, we're looking at 2,651, this blue line here. And to the downside, these are the corresponding levels of 30,000 on Bitcoin. So down at sort of 1728 is where prices could potentially get. Looks a little bit overstretched in the short term on the downside. So you wouldn't rule out any sort of recovery up to maybe this kind of zone, 2,918. But while below there and below this downtrend, there is still chances or still the bias remains on the bearish side of things. Over to commodities then. So oil continues to stubbornly hold around these 7-year highs. Yesterday we posted some gains, and we are posting gains again today, up by around 0.85% at the moment. These previous highs that we posted on the 20th of January were fresh 7-year highs, and it looks as though we're probably going to see another test of those in the coming hours when it comes to oil. So a break above that level there, and we're into sort of a fair amount of fresh air, really, highs that we haven't seen for 7 years or so. So still looking pretty strong overall. We do have crude inventories later today at 3:30 UK time, so be keeping an eye out for that if you are trading oil. Taking a look at gold, that still continues to hold above support at 1830 following the breakout here that we posted on the 19th of January. I've got this trade on here because that was my gun to the head trade yesterday. Made a few ticks on that, which was quite nice as it continued to hold above this 1830 level. Still looking for higher prices in the short term, up to sort of 1876 on on gold. So looking pretty robust. If we take a look at silver, that broke up through the downtrend there on the 20th of January, but it's back below it now. Need to see this do a job here at 23.43. Again, this is an example of a potential trade setup. We're trading in a bit of a range, it would seem, on silver. So we are at the lower end of that range, or closer to the lower end, and we are certainly to the upper end. So buying at this support with a stop below the lower end of the range, targeting on the upper end of the range, set up a nice kind of 3-to-1 risk reward trade on silver potentially. So looking for that 23.43 to hold, and that may represent a decent opportunity to buy in the short term. Okay, let's move on to the indices then. So the FTSE very much on the front foot today, as you can see, up by 1.7% as things stand at the minute. So a really strong reversal following the touch of the lower end of this uptrend, which came in around about 7,227. Yesterday was another volatile session, but we are erasing all of those gains, those losses that we saw yesterday and some. Really strong move to the upside today, which will be very welcome for the bulls. Looking at the DAX, very strong move there as well. So it was touting the idea of maybe a head and shoulders forming here, but we've bounced off of what I proposed was the neckline of that head and shoulders top pattern. So I'm just going to erase that for now because that's kind of off the table at the moment. But we are still trading in a range. Obviously, we saw a touch point there back in May, another touch point here in October, and pretty much got there again just a couple of days ago. And since then, we've seen a really nice move to the upside. Really strong looking green candle so far today. There is a long way to go. Obviously, we do have the Fed meeting later today, so anything can happen. But markets certainly on the front foot today. 2.5% up already for the DAX in Germany. So looking at Nasdaq, that's 3% higher already. It crashed into this big support zone that we've got around about 14,066. We did overshoot it. We did in fact close below it yesterday, closing on the lows of the session. But we're having a really good go at recovering all of those losses that we made yesterday. And if we can engulf all of those losses that we made yesterday, then I think that'll be a really interesting sign and suggest that we're going to see some more upside in the short term as the dip buyers come back in and look to drag this market higher. So pretty positive signs at the moment. Obviously, we are still a little bit concerned by the break of trend that we saw here on the Nasdaq and also the takeout of this support at 15,500. But we've come down to a really interesting level of support and dip buys have stepped back in. So that looks quite interesting, and maybe we'll see higher prices on that one today, even though it is already up by 3%. So that is leading the charge. The S&P 500 is lagging a little bit, still up by 2% on the day, so certainly not to be sniffed at. Again, we found some decent support at this 4,270 level, and we are doing our best to try and erase all of the losses that were made yesterday. So long way to go on the session, but if we can get above kind of 4416 today, then we're going to be above the highs of yesterday's session, engulfing all of yesterday's losses. And that could lead to a corrective move higher. So we'll be looking initially for a test of the 4,580 level, which is this blue line here. So that's kind of where the breakdown began, and also where we saw the break of the trend line. So that'll be an interesting setup today or over the next few days maybe, and it will test the resolve of the beaten up bulls. Okay, that's it from the chart side of things. Let's have a quick look at the gun to the head trade from yesterday. So I managed to secure a win of 9.2 ticks or 0.77R on gold. I was looking at that from a daily perspective, so I was hoping to see a fairly big move on a daily sort of setup. Didn't really happen, so let's try and find something fresh today. I'm going to take a look at the hourly charts just to see if there's something that's really sort of standing out for me at the moment. Generally looking for some sort of reversal into resistances ideally, or supports. Just have a quick flick through some of these FX markets initially and see if there's anything that's taking my fancy. Obviously, these are made on the spur of the moment, and of course, as a result, are highly speculative. So if you're following these, obviously take it with a pinch of salt. This is looking maybe quite interesting. Yeah, so let's take a look at cable. So cable continues to trade lower, as we can see here on the daily chart. We failed at this 50% fib level. We have posted a few decent days of decline as a result. We posted a bit of a reversal yesterday, but we are flat on the session today. And those of you that watch my or these videos will note that I am bullish of the dollar index, so I do expect to see dollar strength, and therefore I think we may see it outperform sterling. So I'm going to try and sell this today. just based on the fact that we've seen a bit of a rounding off here and a few kind of bearish looking candles on the hourly chart. So I'm going to sell it now at a price of 134.96. I'm going to place a stop just there of 35 ticks at 135.31, and I'm going to target a decent move to the downside. So I'm just going to scroll a bit further to the left to see if there's any kind of standout levels that I should be targeting, and I found one. I like that one there. Hasn't been retested either, so let's go for that. Targeting a move down to 133.74, looking for 3.5R on a cable short today. So that is my trade of the day. Good luck if you're taking a look. Okay, so it is a stacked calendar today, as we've mentioned. At 3 p.m. today, we've got the Bank of Canada rate decision. A 25 basis point increase in rates may be announced. So beware of anything linked to the Canadian dollar at 3 p.m. UK time. Also at the same time in the US, we have their new home sales numbers. Sales expected to rise 0.3% month on month. As I mentioned previously, at 3:30 we have the US EIA crude oil inventories number. The previous week saw stockpiles rise by 515,000 barrels. So keep an eye on anything linked to oil at 3:30. As we know, price is stubbornly high at the moment. And trading around about some big key resistance levels. And then at 7 p.m. UK time, we've got the big one, the FOMC rate decision policy, not expected to change. Recent hawkish commentary suggests that a rate rise may come as soon as March. Other commentary surrounding the winding down of QE is also expected. So it could be a little bit of we've got to a fantastic start on some of the indices, that's for sure, but maybe in the FX space and the commodities space, things might be a little bit muted in front of that number, but obviously expect that to pick up after 7 p.m. tonight when the rates or the rate decision is out of the way. So take care if you're trading today. Some really big events in the market to be aware of. Hopefully it's been useful for you this morning. I'll be back tomorrow morning with a further roundup on the charts and the latest headlines. Until then, trade safe, guys.